Alternative Investment Hour starts now.
Welcome. It's Robert Kuhn.
And Jeff Johnson.
Jeff, good morning.
Good morning, man. It's rainy and bad outside, but I got to tell you, I feel like this is going to be a great day.
It's going to be a fantastic day. You know why? Because we're going to educate our investors on our listeners on how not to lose money. And Jeff, you know, a lot of advisors, they make these big macro calls. Mm-hmm. And would you believe it? Sometimes they get it right.
Right.
And then when they do get it right once, they live on that call, even if it was 10, 15 years ago.
Well, even a broken clock is right twice a day, right?
Yeah, absolutely.
So you keep saying, I mean, the market's eventually going to come down, and then the market is eventually going to go up.
Yep.
And if you know how to time it correctly, God bless you. But
Well,
that's a tough road to hoe.
Well, Ray Dalio, and for all of you listeners out there, he is the second most affluent hedge fund manager, $18 billion net worth. He had some great nuggets that he puts out this week. The average man tends to buy high and sell low.
Oh, yeah. I've told you this story before.
The exact opposite of what you should do.
When oil prices dropped, when they went from 148 about in 08, they dropped down to 32. Up until they got back to 80 or 90, you couldn't get anybody to invest in oil infrastructure or oil. Same thing happened with this last correction. Went from 110 down to 26. Trying to talk to anybody. You know, we do water. We have exposure to the oil price, and that's what helped drive our business. And nobody wanted to do it.
You can't be serious, man. You cannot be serious.
You get back to same with markets. I absolutely believe that.
Yeah, that's true. And he also had another nugget, Jeff, and I love this. He who lives by the crystal ball will eat shattered glass.
I've never heard that. I've thought I heard them all. I've never heard that.
And again, this is a guy who manages $100 billion. You couldn't get in his fund if you had $100 million. Right. You just wouldn't get access to it. And these guys are coming out and saying, you know, you need to be careful. And the best way to be careful, the chance of a recession was only at 23% in December. Mm-hmm. They put out their research report in January. It jumped up to 74%.
Wow.
They said, we've never seen that, and we're very, very surprised by that.
Wow. I'm surprised by that. We're due, but sometime in the next 2 or 3 years. And when that happens, I'm going to ask you, as an expert in the financial markets, you see a recession hit, what's going to happen to the markets?
Well, the markets are going to go down. And again, we don't know if it'll be a big dip or if it'll be, you know, like the early 2000s, but losses are losses, period.
I don't like losses, boy. Nothing ruins my day more than losses, boy.
And if you're concerned about whether your portfolio can handle a 20 to 30% correction, the easiest way to find out is simply text PROTECT to 474747. But Jeff, to answer your question, markets are going to go down.
They are.
And bond markets are going to go down.
Yeah.
So if you look at what people have been using to stabilize their portfolio, Jeff, it's really simple. Interest rates have gone down, bonds have been good. They've gone down since the mid-'80s, for all intents and purposes. That's changing. Rates are probably going to start to rise.
Yeah.
And when people have 30 to 50% of their portfolio in bonds, and markets go down and their bonds go down, then again, they're just sitting there and taking it.
Stop it!
You know, exactly. And if we have anybody out there listening, if here's what's so frustrating about it. You have people 55, 65, 75 years old, however, some people work to their 90s, but you've worked your tail off your whole career. You've done things right. You've got your kids through college. You've provided a nest egg of whether it's $1 million or $25 million or whatever it is. And you're sitting here exposed to this. If somebody is listening in the audience and you're getting close to retirement and you need a way to help protect against loss, you can talk to Robert about that. That's his deal. But you need income. You need income. Again, I don't care how much you have on a financial statement. If it's not providing you a means to just live life as you're used to, what good is it?
It's not very good at all.
And we can pay 10%. And again, if you're still working in a high income earner, we can show you how to save a bundle in income taxes as well. And if the government is going to put an incentive in place That's a big incentive. They want to see the investment. And as a matter of fact, I got a couple of guys here, if we can play this drop, guys, of President Trump and Warren Buffett. They both had something to say about this.
Small and mid-sized businesses will receive massive tax cuts. It's a lot of the folks in this room. They'll be able to deduct 20% of their business income. All American businesses, including American farmers, will be able to deduct 100% of the cost of new equipment in the year you make the investment. That is something that is tremendous. That is something that I think is going to be the sleeper of the bill. You deduct it all in 1 year as opposed to over many years. That's a tremendous thing.
It's a huge tailwind, and it's particularly a tailwind if you've got, particularly for companies that have had lots of depreciation and taken bonus depreciation up front. So it's a big item there.
I think everybody would agree Warren Buffett.
If you believe like we do, and 70% of the economists surveyed are worried about a recession, take the stress test at our website, www.altinvestmenthour.com, or get on our distribution list. Learn about 10% distributions by texting PROTECT to 474747, PROTECT to 474747.
Investing is hard. Harder if you only have one strategy. You've been listening to the Alternative Investment Hour. Stay with us. Jeff Johnson and Robert Kuhn will be right back.